Which Demat account is actually best for beginners in 2026? Welcome to The Explainer. Today, we're bringing you the ultimate showdown. If you're stepping into the Indian stock market right now, you're immediately faced with a choice that's going to dictate your financial journey for years to come. We're pitting India's top 3 discount brokers, Zerodha, Groww, and Upstox, head-to-head to definitively see which platform reigns supreme. At first glance, I know all 3 of these apps look practically identical, right? They all promise low fees, seamless investing, and a quick gateway to wealth. But I can tell you right now, the hidden differences in their structures, their fees, and their tools, well, those could cost you dearly. Or, if you choose right, accelerate your growth. Just look at the sheer scale of the landscape we're dealing with here. As of 2026, Groww is absolutely leading in pure numbers. We're talking a staggering 13 million active users. Zerodha sits comfortably in second place with 6.8 million, and Upstox holds a really strong third with 1.9 million. But here is the fascinating twist. Despite Groww's massive lead in user numbers, Zerodha continues to totally dominate when it comes to highly active traders, overall revenue, and actual profit. Basically, Groww has captured the passive mutual fund SIP investors, while Zerodha has completely cornered the market on high-volume derivative traders. Okay, let's dive right into this. To find out exactly which one is right for you, we're going to evaluate 6 crucial battlegrounds. The Great Brokerage Battle, uncovering those hidden charges, app simplicity versus the learning curve, trading tools and research, the realities of their customer support, and finally, the final verdict. All right, kicking things off with round 1, the Great Brokerage Battle. Let's talk about your base costs and account maintenance. So when it comes to just opening an account, it's actually a 3-way tie. It costs absolutely 0 rupees to get started with any of them in 2026. Free is always good, right? But look closely at the annual maintenance charges, the AMC, from year 2 onwards. This is where Groww takes a massive early lead for passive beginners, because their AMC is permanently 0. Nothing, nada. Zerodha, on the other hand, charges $300 per year for regular accounts, and Upstox also charges $300, but they bill it monthly at $25 plus GST. So if you're an absolute beginner making only a few trades a year, that 0 maintenance fee from Groww is looking incredibly attractive. Moving on to Section 2, and this is a big one. Uncovering the hidden charges. Basically, what the marketing totally leaves out. When we talk about equity delivery, buying a stock and holding it in your Demat account for more than a day, Zerodha is literally the only one offering a truly free ride here, 0 brokerage. Meanwhile, Groww charges 0.1% or 20 rupees, whichever is lower. And Upstox, they charge a pretty massive 2.5% or 20 rupees, whichever is lower. But wait, you also need to pay close attention to the depository participant or DP fees. These hit every single time you sell a stock. Here, Zerodha is the cheapest at just $13.50 plus GST, while Groww is actually the most expensive, sitting at a net cost of around 2183 rupees. Let's see how this actually translates to your real-world costs. Take an 800 rupee trade, for instance. Because Upstox uses that really high 2.5% variable rate for delivery we just talked about, a trade value of just 800 rupees triggers their absolute maximum $20 fee. Yep, you heard that right. So for a beginner executing smaller, systematic trades of maybe 3,000 or 5,000 rupees, Upstox is going to consistently charge you that maximum $20 brokerage every single time. Meanwhile, on Groww, you wouldn't even hit that $20 cap until you make a $20,000 trade. But hold on a second, because Groww has its own hidden gotcha that you need to know about. 1%. If you're using a UPI mandate balance to execute trades on Groww, your brokerage fee actually skyrockets to a flat 1% of the total order value. And crucially, there is no maximum cap. That $20 limit we just talked about, it completely disappears. It's a massive detail buried deep in their pricing documents, and it can seriously eat into your returns if you aren't paying attention. All right, on to Section 3. App simplicity versus the learning curve. How do these platforms actually feel to use on a daily basis? So Groww is practically custom-built for the absolute beginner. It's got this super clean, minimalist UI that feels way more like a friendly personal finance app than a hardcore trading dashboard. The learning curve is, well, it's virtually non-existent. Contrast that with Zerodha's Kite platform. Kite is an incredibly information-dense, professional-grade terminal. I'm not gonna lie, it looks a bit like an airplane cockpit on day one, but it becomes an unbelievably powerful tool once you actually know what you're doing. And then we have Upstox Pro. which kind of captures that middle ground perfectly. It places a huge emphasis on extremely fast execution and multi-charting capabilities. It really bridges the gap. It gives you the speed and the tools that active traders crave, but without needing you to be some sort of algorithmic coding genius just to figure out the interface. Moving to Section 4, Trading Tools and Research. Let's find out who has the absolute best tech under the hood. When it comes to pure tech, Zerodha operates on a whole other level. Their arsenal is essentially a complete pro-level ecosystem. You get the Kite Connect API to build custom algorithmic trades, over 100 technical indicators, seamless integration with Sensible for option strategies, Streak for backtesting, which is awesome because you don't even need to code for that, and of course, small case integrations. For the serious analytical trader out there, Zerodha provides an absolute playground of data. Meanwhile, Upstox brings some seriously heavy charting tools to the fight, offering 114 indicators, 14 different chart styles, and advanced features like Iceberg Plus orders, which let you split up massive volumes. Now, Groww takes a completely different philosophy here. They use native TradingView charts and offer basic option chains, but they intentionally limit advanced screeners and offer zero API access. Why on earth would they do that? Simple: to keep their app entirely clutter-free. For their specific target audience, that simplicity is a feature for sure, not a bug. Let's turn to Section 5, Customer Support Realities. What actually happens when things go wrong? So looking at user reviews across platforms like Trustpilot and Phonology Select, Upstox currently holds a lower rating, sitting around a 2.5, specifically due to their customer service. Users frequently report really long wait times on phone lines and response times stretching from 7 to 10 days for standard technical support tickets. And let's be real, when your money's on the line and markets are moving fast, a delay like that can be incredibly frustrating. Let's contrast that with the other two. Groww is widely praised for its fast, highly responsive in-app support chat, which is obviously a massive comfort for nervous beginners. Zerodha, on the flip side, relies heavily on its massive, beautifully structured community forums, like Trading Q&A, alongside a very detailed ticketing system and educational documentation. So they might not always answer the phone instantly, but honestly, their self-help ecosystem is pretty much unparalleled. And finally, Section 6, the final verdict. It's time for some persona matching. All right, so here is exactly how you should choose. Number 1, the absolute novice. If you just want to set up passive mutual fund SIPs and buy a few long-term stocks without any clutter, Groww is your undisputed winner. Number 2, the analytical beginner. If you want zero delivery brokerage and you intend to actually learn deep technical analysis and use professional tools as you grow, you must choose Zerodha. And number 3, the aspirational trader. If your focus is on high-speed intraday execution, margins, and advanced charting directly on your mobile device, Upstox is your ideal middle ground. So, the absolutely crucial point I want to leave you with is this. You must choose based on your actual investing style, not just the flashy zero-fee marketing banners. A clunky, overly complex interface will stop a beginner from investing at all, just as a simplistic app will frustrate a seasoned trader. Building the right investor behavior and discipline compounds so much better over time than simply chasing the lowest possible fee. Which leaves us with the ultimate question before you go hit that download button. Which investing persona actually aligns with your 2026 financial goals? Are you the passive SIP investor, the data-hungry analyst, or the rapid-fire trader? Take a hard look at your own habits, choose your tool wisely, and start building your wealth today. Thank you so much for joining me on this explainer, and happy investing.